Well, good morning, everybody. Thank you for joining us. Got Alan on with me again today. And what we're going to be discussing today, I'm asking Alan for a friend here. Of course, for a friend. Alan, could you please explain to us what is going on? Before we get to that, as usual, guys, we're not licensed financial advisors, so anything that you hear here is just our opinion on the markets. And if you were to blindly buy or sell anything without doing your own research first, you're going to end up in a van by the river with Doge and Boneholder. So with that said, so I'm having a hard time reading these markets. I'm not going to lie about it. Now, obviously, we've been looking for a sell-off to the wick low here for a while, and so that was a high probability. So for myself, I'm not going to necessarily overreact, but we are getting to some pretty critical junctures. And so I've asked Alan, he wants to give us his insights on what's gone on last year. And, I would like to get his very cool, calm, and collected views on things. Before we went live, the one thing I highlighted to Alan was this trend line right here is really the one that I'm watching to see if Bitcoin wants to regain some momentum after coming into this area in general. And we've got some other correlated things going on right now that we're watching. The U.S. 10-year, a bond yield is spiking here this morning. There's been a really good correlation between bond yield and Bitcoin pricing. So what's going to be very interesting to see is if that correlation starts to break down or if it holds true. And I've noticed in the past there's a little bit of a lag. So a couple of things here that are giving me pause that's making it difficult for me to give a really good analysis on this market. But I hope Alan has some good answers for us. But with that said, I'm gonna stop my share here. And good morning, Alan. How are you doing this lovely morning?
Yeah, good evening and Happy New Year, and Happy New Year to everyone. It's been a little while since we were on a stream. I was hoping the market would have been a bit more bullish over Christmas with us staying away from streams, but that's I think we'll have to start blaming Heath for all his bearish videos that seem to be coming true.
It's clearly Heath's fault, exactly.
Yeah, he's making too much money whilst we're all wondering
exactly
what
right. Quit being on the right side of the trade, Heath, you turd.
Yeah, that's right. It'd be nice if he put something wrong up occasionally, but yeah, it's now I mean it goes to show if you're trading price movement, you're doing very well at the moment because price is extremely volatile. But yeah, I mean I'll do my best. It's been, I think, remarkable 2021, even if we didn't get perhaps where we thought we would, and obviously we talked about that months ago that we thought we were in trouble for blow off top at the end of the year because the price action wasn't behaving. And yeah, that's obviously what we saw. We've had 2 bearish months. We've got a bearish start to this month. It's different, but yeah, still a lot going on in crypto, and I think that's the perhaps the step back and look at is crypto going to die suddenly, and we're in a bear market and everyone's going on holiday and no one's going to build anything anymore. I mean, that's not happening. I mean, I think crypto's in a great place, but it's been difficult. And I think, I'd say the core narrative that certainly probably we all got hooked into in 2020 is broken. And it's now a case of what's happening looking into this year. So start, if I can share my screen rather than just waffling on for ages. So start with my usual pictures, because I first start with a picture. You see that refresh?
Nice. That's very calming.
Yeah, so this was the end of my afternoon today. We're walking Bali and along the coast, so it's been beautiful winter's day. It's like the fishing boats there in the sunset. So been a lovely day. It's chilly here, but we've had a sort of bounce. We got to a net minus 22 Celsius on Christmas Day, which was horrendous. And then it would like freeze your face mask in a minute when you're outside. And it's been much warmer since, and up just above freezing. But we've had this glorious sunshine every day, so it's been lovely. So I sort of been out today having a walk along the coast. It's been absolutely lovely, and probably a good thing to do in this if you're heavily exposed to these markets and they're chopping around, just go and have a walk somewhere nice and relax. So yeah, took a few pictures whilst I've been out. It's my trusty Huawei phone, and see what's going on.
Took this from your phone?
Just from the Huawei phone. I mean, got a lovely optical zoom on the phone, so it's takes some beautiful pictures. So it's yeah, it's lovely. So it's a helicopter circling. There's been something going on. I think there's a political event or something around here because there's a lot of security, but helicopters flying around. Yeah, we were just innocently out for a walk. And then once it had all finished today, we got on the metro, and it happened to be 5 o'clock, and this is more typical China. Sardines in the metro trying to get across town. So yeah, I never seem to have any people in my pictures. I thought I'd take an opposite view of his life downtown on the metro, very much like you see in Shanghai or Beijing. It's this very, very busy at peak times, big long trains. So yeah, been lovely time since Christmas. And you know, I put on Twitter, we've had a lovely Christmas. Yeah, Christmas isn't huge in China, but it's certainly growing, and all the shopping centers and stuff been very Christmassy. It's been really good. It's been live music in our local sort of shopping mall where we go a lot. It's been very good. So yeah, so that's all been really nice. And then obviously we've got to look at this mess that is crypto and try and make sense of what's going on at the moment. Because I think if we look at this monthly chart, and I've been talking to you know, Michael Heath, others been chipping in on Twitter, having a look at this. Obviously, we had this red candle November, when November was going to be bullish. Then we got down here in a hurry through December, but we closed the year below this support. We came up and tested it, and then lo and behold, we've now lost on a daily basis this support at the base of this sort of order block. And really, if you're looking down here, you're looking, where's the next support? If this continues down, we got 35,000. Yep. And you don't want to look below that for the red candle. Exactly. So it's long way down. So yeah, so market, you know, I got a bit of heat on Twitter for Bitcoin looks weak before we capitulated here, but it just did. It looks weak, and so it's continued down, and obviously we're under pressure at the moment. So we've also had a reset today in Ethereum, Bitcoin's recent breakout on the short term, but obviously we're still holding above support here on this ratio, so this still looks fine at the moment. But obviously we've seen now sort of 4% on today on Ethereum because it lost its support, trendline support in the more short-term chart. So so all under pressure. Obviously this has caused pressure through the market. Now, a slightly different view quickly, which I've been monitoring, is obviously total cap, having a look at how much money's flowing in or out of the whole market. Obviously on this at the moment, we haven't made the lower low. So I'm just keeping an eye on this, perhaps a little bit. Have a look here at this, you know, it doesn't look great, but it's not got to this low, which came down to this sort of weekly support, 2 trillion, but it's been testing that area now. You know, clearly the line we lost here, if we look at this, was obviously from way down here at one point, base of this at 1.17 trillion. So a sort of breakdown like this, you know, could we come down 1.7 here to this low? Yeah, of course, it's not. That wouldn't look ridiculous off losing this sort of upwards momentum. So
I've got the same trend line.
This, you know, I tweeted originally when we got here, and it was interesting because that when we just got a daily close below this trend line was on the Omicron day. when we had that, Omicron news, and then we sort of came out, and then this looks ugly, and then we got the wick. Obviously, since then, you can argue we went back up and down. It's been a bit more volatile, but we've effectively faded back down to this wick, sort of where we are in total market cap. So, which isn't that unexpected. We've seen before, when we had this big correction in May, we then sort of messed around here, fading back down to the bottom before we took off again. Obviously not quite there yet at the moment. I mean, see this, if we zoom it in, we were still, I could see this compressing because we were making sort of some sort of higher lows here and compressing on the price movement here, albeit, through the Christmas period, so be a little bit cautious.
Yep.
It was compressing. Are we going to get a move? And then yet again, we got a bearish move. So again, I could see this. I mean, what I say is I'm not actively trading this at the moment. I played a little bit of defense on Ethereum up at 39.52 and still have a bit of that in cash. A bit of that was reinvested, which obviously has not done very well at the moment, but we'll see. I've got some liquidity being provided with some of that just to, probably earn a few pennies in reality, although volatility is good for liquidity provision, and we'll see.
Yeah, I'm in the same boat with you. So I added, my last ad was at 45.5. I was watching the order book on Coinbase and it looked pretty positive. It seemed to be more buying than selling. And then, so I put a quick stop under that though, which slipped a little bit because of how fast it came off. But we got out at right around 45,000, a little below because of the slippage. But and then I bought back in here. Basically, when we first retook the 43,178 weekly support that I've got on my chart, I bought back in. So I'm a little bit underwater right now, and I'm debating when I want to try to get neutral, depending on what price action does here, because we might have. I'm looking at this thinking we just have another leg down possibly, and then a bounce. But I'm with you. We're all trying to buy, deploy what capital we have at these different levels, and it's like it's just tough. And so, we're all, I think those of us who are more long-term that are trying to, maintain a good position for and another potential leg up if we get one, it's tough for us, but the fundamentals definitely still support that view. But the short-term price action here is definitely a challenge. So I think we're all going to struggle with good entries as long as you're on the long side under this much pressure. The thing is,
leverage long is tough here. Yeah, I mean it's.
Yeah, I think in a long term, I still think you're doing the right thing to do is to be going long here, long term. But we have to know very quickly where we're wrong and accept our losses. When you're on the long side of a trade for a really long time, it's been going up. I mean, honestly, Bitcoin, crypto, we've had a better part of a 2-year bull run, right? So from the time we had the March 2020 capitulation through to today, it's been almost 2 years now, if you think of it that way. And it's really been a really good market, right? So we've had some sell-offs and things, but when you're into exhaustion potentially like we are, you have to be very, very cautious. And I still think it's the right thing to do to buy into support in this market, because I do think there's, like you said, nobody stopped building. All the momentum for crypto hasn't stopped, it doesn't just dried up. It's just a risk. It's a speculative set of assets, and Bitcoin and Ethereum fall in that bucket, but especially the altcoins underneath them. So I do think it's the right play to continue if you're very long term, if you're talking weeks or months specifically, to buy into support here. But we have to know where we're wrong, and that's really what I want to get. And you've got some. I love the way you put together your more long term charts in this wedge that you have here. You've got basically, some of the same levels I'm watching. Can you zoom out on that chart right there a little bit?
Yeah. So I was going to say, where we are now is testing this trend line.
Yeah.
And we can see it's fighting here to try and hold this area. And, I've been looking at this on a weekly basis. This has been my favorite, tweet for a while on where we are. Is we're coming in now and thoroughly giving this a test. And if this weekly closes below here, then that would also, we've got a 2 weekly here at 43,207, which is what you were talking about. I think the weekly support there. If we lose that, then 39 looks likely then on the weekly chart, which is strong support. I mean, we were in this the sort of candles here and here in the middle. There's a lot of support there, 39. So and then obviously the monthly at 35 in the middle of all of that. And the way this market is, if it keeps looking like it's almost like there's a sort of manipulation or, you know, just a sell-off, however you want to look at it, because we obviously can't do anything about what's happening, sort of moan on Twitter about manipulation, but you can't do anything. No. You know, it could wick right down and stop everybody out, right down into the 20 somethings, because, you know, if somebody's chasing liquidity, they'll say, well, why don't we have all of it? It's the way it is. And we don't know. I think we would see, and I think we will see buyers now at these levels, and we certainly would if we come down here like we did last time.
I think I like your support, but I like your more measured approach. When you look at it, you know, too, the downside from here is probably pretty limited before another bounce for two reasons. One, we've been basically at these levels for going on a year, right? So if you look at that far left top wick you have over there, we're not far above where we wicked up to in January of last year. So
at the start of January, so we could end up second week of January, right back at the same place we were last year.
That's exactly right. And so the downside is probably limited because of how much time we put in over there. But like you said, the one thing that was really concerning starting this year was we had, I tweeted, I think I might have tweeted about it, or I put it on Discord. I can't keep up when, you know, I put a lot more stuff on Discord than I do on Twitter these days, but I shared the OI, the open interest, and it was rising very rapidly. Now, of course, the open interest is split between both long and short positions. Right now, the book is still stacked on the long side. So there's still more long interest than there's short interest. However, we have had, you know, a couple of series of long wipeouts. So every time you see a big red candle, far more longs get liquidated than get liquidated on the short side on the green candles. So there's a good possibility that we get another OI, you know, open interest wipeout or wipeout of leverage in the system to the long side, and then a quick rebound and actually just wipe out a lot of short interest on the other side and really just reset the order book. It's kind of what I'm wondering, if what the market's kind of cooking up here is if we get one more wick down, wipe out some more longs, and then a very, like you said, as you hit some of those areas where there's definitely going to be some buyers, we get a very strong bounce back and just wipe out a lot of the short side, and just kind of reset OI, which wouldn't bother me. That would give us a nice, like, I think at that point we should all, any sort of, if you're long, you know, on a big bounce, maybe get a little bit more neutral and just kind of take a breath and analyze where we're at as the market resets. And if you're short, you know, same thing. Hopefully everybody has proper stops in place. There are people that are short this that should be. They're doing the right thing if they're on a shorter time frame. You know, they were clearly in the right for shorting into resistance on a shorter time frame, which is like where Heath is and others are. So I think it's important to note that if you're long, there are people on the other side of the trade from you who are in the right. They're right for shorting this. However, they are on the, you know, they could be on the wrong side of the trade at some point. When they get to be on the wrong side of the trade, it's a time for us to reset sort of, and not get greedy.
Yeah, I mean, your prop trader here is probably short here at 65,000 with a big position, and has just let that run and has been shorting these, scalping it all the way down off of all these resistances on the way down. I mean, that's your professional trader will probably have layers of positions here in this coming short, and we'll be looking at taking profit on the way down all the time. But we'll have a pretty nice big bag short here, I would think. And market's uncertain right now. I mean, I think, yeah, I mean, they'll see all these trend lines and all these support and resistances. We'll see. I mean, can have done well. So I mean, obviously, I don't have a, and I think you know, if we perhaps look a little bit at 2021, because it was interesting and where this has all ended up. For me, this was the chart that I built CTM. You know, this was my CTM chart that, you know, you and I were looking at our own, you know, each other's charts for in 2020 when we were buying in the accumulation, and was like at the before the big run here. And for me, this chart was solid. It was very, very solid for reasons that then I sort of ended up hooked up in a narrative. I would say that was my sort of first big mistake, was getting hooked up in a narrative that was we were going to get to the moon. Everyone wants Lambos and to go to the moon. That's crypto. That's what it's all. If you go on Twitter, over Christmas, I was seeing we're going to 550,000, and then there's someone saying we're going to go to 100 million Bitcoin by some year or other. And it's just like, what? It's like, let's get past the next resistance first. But, you see all this. I got hooked up in that thinking, right, I need to be positioned for Q4 of last year, and we'll just run the strategy too, and then that'll be great. Now, of course, it's not a bad trade if you get in, as we did, CTM down in this 8,000, 10,000 range on Bitcoin. Is still a great trade when you're up here. So you don't lose sight of the fact that it's a great trade, and this was a great place to buy. But what I didn't do, that I should have done, is after we had this top here, lesson one was trust the price cycle. Because if you trust the price cycle and you sell and you wait, we knew that. And then there was all this, well, it's too early. It's, blah, blah, blah. Talk yourself out of the thing that you talked yourself into. That was like almost a little mini lesson in itself. Was, well, why not just sell it and see what happens? Because you could take 50% of your whole position off or something at price cycle and say, that could be a top. That's a pretty big indicator that's been right every time historically to take it off. So it was a mistake. But once you have this top and we come all the way down here, I got out somewhere in these 40s thinking this market's broken, when we had a retrace up, and then got out of a loaded position, and then could buy some back when we came down here. Then I didn't clone this line up here because, again, I was in the narrative. And when I did, when we'd come down here, I looked at this and thought, how stupid is this? I did all the analysis down here. Just keep doing your TA. You park that line on there, and you can get out again. And it's the simplest trade in the world. You've got the most obvious trend line that's at the same angle as every other thing here. It's like lesson one, just take your profit there and then wait and see what happens. It's the same thing. You've had a price cycle there. You've got a perfect trend line position here to get out and take some profit. It's not take all of your bag off. That's not the point. You don't take all your bag off, but it's like you can take some profit there. And lo and behold, you've traded this pretty well without doing an awful lot. And when I look at my Ethereum chart, and again, I was in the narrative when we came up to the top on this Ethereum chart. We came up here in November. It's like this thing's supposed to go to the moon in November and December. But we had this line. We talked about it. I talked about it the day after one of our streams and the week later. Again, my lesson is trust the chart. Just get out of 4,800. I did take a little bit profit there, but why not take a significant amount of profit on a very obvious big trend line? I mean, you don't see too many lines like this one that goes from the last all-time high through the previous one to here.
Yeah.
And lo and behold, we've come back. I don't expect it to come back as much as this. More than likely it comes back somewhere down here, and then we take off again probably, because it tends to be how these corrections work when you got a significantly higher high. There's just lessons of just trust the chart. Yeah. That's almost like the easy money to do when you've done the core TA. That's my big lesson from last year, is you can be in this thing and still think ETH will go to 20K or whatever, because ETH this year just amazingly bullish when we get to that part. But it's just the lessons for me is, obviously I'm not a trader historically. I've just been an investor, and it tends to be other people's investments. I've made more money on than my own through my professional career. To me, the lessons are just, sometimes you just need to do the simple things and execute those well, and you're going to do fine, and you'll do much better than almost everybody. And then do your research on the macro stuff. The research I was doing into Ethereum was correct, and the chart was correct. When we had the big wedges at the end of 2020 on ETH BTC and those things, that was time to rotate more capital. The chart is amazingly bullish at that point. You look at it now, you don't see a chart like that, like the one at the end of 2020 ETH BTC in a great big wedge and a multi-year consolidation, you know, those charts don't come along every day when you look through the market. So it's like, you know, lesson there is just trust the chart in that instance. You know, you've got the macro thesis, you've got the chart, it's got all the correlations. We're in a bull market, you know, there's loads more upside here historically, etc. Again, I didn't rotate enough. I did put some money into Ethereum, and I'm glad I did. Didn't trust it enough. So, you know, that's sort of been my lesson of, you know, listen to lots of people who know things, which is great, but I have to trust my judgment in the end on where did I get to, and not get hooked up in hyperbolic stuff that, you know, in the end, just look at the monthly chart, you know, go here. I think the tweets were never sell in November and December. Well, yeah, that's just narrative. You know, there's nothing to say it won't go down in November and December. The chart, you know, we got a bearish candle, boom, bearish candle, boom. It's happened again, you know. So yeah, I'm, you know, some lessons learned there for me, and it's
Right. Definitely some
you know,
lessons learned.
money left on the table, isn't it? In the end, I mean, it's not like we're in a bad trade from where we started off, but it is a lot of money left on the table for not doing an awful lot there. That wasn't trading the 8 hour and trading the stop losses and getting all in. That was taking almost like you might do with a pension or something. You take right, that company is not looking so healthy now. I'll take some of that bag off and allocate it somewhere else. You know, the macro thesis is broken. That's that level of decision making, not the sort of things we do every day when we're on Twitter, whatever, posting 8 hour charts and 2 hour charts and whatever, you know, which is great. But that's actually not where you could have made the most money in this market, is my view, what I've learned this year.
Yeah, well, that's some really good reflections, and you know, for me, I'll tell you one that I'm gonna try to be. So it takes time and experience to be really patient with the markets. You know, when you first get started, you're a lot more, I don't know what the word, but kind of hyperactive with trading. I think most people are. But you know, with time and experience, you just see the market at a broader level. And one thing that I'm definitely going to try to do this year is slow down and just wait for the best opportunities and not be, you know, I think I did a pretty fair job of that through last year, but just really not just have a plan and execute the plan. When things are, you know, massively red and selling off, well, you buy into that, right? As long as you're buying into support. And whenever it makes a move upward, I think it's that, to your point, you know, we were all kind of caught up in a bit of a narrative, and we didn't take profit when it was clear that we should have. And you know, I was better about that in November. I did at the very pretty close to the top get out of my leverage positions, but you know, I knew when we lost the 50-day, I should have taken some spot off, right? That's just my strategy, and I didn't do it because the on chain looked okay, this, that, and the other, and
But
so
you
and I
also
was caught up in that.
influenced, aren't
Well,
you?
what I
You
didn't want
read
to do is
1,000
sell
tweets a
spot.
day.
Yeah, I didn't want to sell spot and it turn around and some of the moon boys are right and it went. And I never thought 400,000, but you know, what if it went to 120,000, right? I didn't want to be the guy that sold spot, but you can't, you know, we can't trade like that. We have to trade, and that's the other thing too, is that this market is obviously
Systematic.
maturing, and it's gonna slow down its momentum to the upside as it matures.
Yeah. So
Overall, on a macro level.
I think for everyone, there's got to be some, when you're wrong, and do some lessons learned. And that's you know, if I think back through my IT career and all the things over the years, goodness me, I mean, you have to know when you've got things wrong over the years and there's been a big mess and you've sorted it out and made bad decisions. And you know, if you're kind of good at that sort of work, you will correct your mistakes and learn from them all the time. I mean, that's the best way. Certainly software development is iterative. You're going to have bugs, you got to accept it, which means you got it wrong. That's what a bug is. It's wrong. You're going to have them and you have to be able to fix them, you know, be robust with testing and stick to your methods and your system to build things well. I think that's exactly what you're just talking about. There's a method in the madness. And you know, I'm almost trying to find my rules a little bit, actually, being a little bit more active than I would have been just hold it and ignore it for ages, like
Yeah.
in a pension, so.
Well, you and I are on the
Mm.
opposite sides. I need to slow down and quit trying to trade 4-hour charts and probably just stick with, the longer trends, because that's what I'm better at. I'm better at that. I'm better at seeing kind of the longer trend, allocating into support as things are rounding out, and then exiting when it's clearly getting overheated. That's what I'm better at. I'm not good at this, or as good, because I don't have the time or energy or patience to watch charts all day long. So I end up doing it necessity, but I don't really want to.
I
Um,
think we can feel, particularly if you're doing the Twitter thing as well, and obviously you're running a Discord and doing a few other things, running this channel, you can get caught up in things that you want to tell an audience that perhaps aren't your strategy, which isn't great if you're trying to trade off them. It's almost, it's like we as a developer a long time in software, still hands-on now a little bit, doing some things in the background. You have coding rules that as soon as you go away from them, the whole thing collapses in a mess, and your software becomes bad. It's stick to those rules because you've built them up over a long time and they work. How to code defensively, how to test, this is just a version of that for me, big time. It's like, what are the rules? How do you get the best result consistently, which is, what someone like Heath is doing is very systematically trading the method. And whether you
yeah.
do it on the 1 minute chart or the 1 month chart, the
What's
method's very systematic.
And what's great about Heath is his I've adapted his style. He's obviously trading a little bit more on lower time frames, and he's intraday, and so but the general philosophy around just navigating the market, finding where buyers are going to be at and where sellers are going to be at, frankly, and then there are clear indicators of when you've reached exhaustion to either side of a move, and then you take advantage of that. It works on a lot of time frames, and I'm starting to, I've moved to more of a daily, and weekly is really my key levels. I've kind of quit even mapping daily levels for the most part. I'm trying to zoom out and map, like you've got here, your weekly levels. That's really what I'm using predominantly for my support and resistance, because again, I'm more long term. um but yeah, I think it's a great complementary channel to what we do, because obviously he's able to help people understand at a very granular level what's happening with the markets, and how to very quickly and easily find good levels, and how to navigate the markets. And if you're not an intraday scalper, but you want to take those lessons and zoom out a little bit, you can do that. You can zoom out, and you can apply those lessons over longer time frames as well. We have some questions here. Do you mind fielding a few questions? I was going to relay them to you if you don't mind answering them.
Before we look forwards a little bit for this year, absolutely, let's field some questions.
You want to do that now, or you want to?
I'm happy to field some questions before.
So, somebody asked about a potential double top being April and November tops.
Yeah.
I'll let you give your take on that.
Yeah. So I tweeted, I think, back at Jordan earlier as well about this, with what is everybody's very bearish. Is for me, I think what some people will see is that it does this double top now with the macro policy change, which is rate hikes and things that can be quite bearish for growth tech and volatile assets like crypto. Is there a possibility that we just chop around in 2022 because the conditions aren't great, and we're in a sort of, call it a bear market, call it what you want. I mean, that we just don't get this growth that people expect because the conditions aren't very favorable, and that would mean that this was the top. I've said before, I don't discount these ideas. They've all got some merit, and I don't think it's illogical to think that this could be a top in a market, and then you've got some difficult conditions and we come down and we bounce around down here for a while. Not impossible. I say my base case though is still, and I think, without talking too much about YouTubers, but I do like Nick Merton's model on Data Dash, which is much more conservative than a lot of what other people, and he's been like that all the way through, which just looked at, and he was saying, early in last, sort of maybe midway through the year, I picked it up, and he thought we would get an end much later this year to the cycle. It was going to lengthen out proportionally, and we could come back off this and test the lows, and then, but we will regain some higher highs, and then we can go up to a higher level to finish the market this year. And it's the basic lengthening cycle theory, based on percentage growth in the cycle. Of course, if you look forward another cycle, things will be different again, but obviously he's talking about the change in the macro, the maturity of the market and the macro position, and lots of things could bring, less of a bull and bear market cycle there. We may not see, and obviously we have Ethereum throwing this giant spanner in the works this year with putting this huge supply shock in, and will we see a flippening? Will we see a different set of base metrics for the market? Will we see, so the next cycle's a way away, and everything could be different by then. So I think, it's not an impossible thing to see. I just say, for me, it's not my base case right now. I'm not looking to get out here completely. But I wouldn't discount the fact that we could come down here and we could come down further, and it would get very ugly in this quarter, quite possibly.
I think
that would say that was a pretty good call. And as I said, those two tops, the pi cycle's the first one, the trend line's the second one. It's not, it's not impossible to see that. It's almost like we're trading in a range if you look at those two trend lines, and then we just bounce up and down in the range and we climb up over time. Right. It's not impossible to see. So
exactly,
long answer.
Yeah. I think having a more conservative view of the returns moving forward is probably wise. It may continue to march up, and we may see $1 million Bitcoin in our lifetimes, but it may just take a little bit longer to get there than people want to believe that it's going to take. This is the strongest returning asset in all of human history. And asset class in general. The .com bubble was pretty close, but this is a pretty strong asset class, and it's put in some pretty crazy returns. So
on that point, there's a really big irony that one of the guys who made an absolute stack in the .com bubble because his share price went to the moon was Michael Saylor, who's now bigging everybody up on Bitcoin. I just find that quite comical. If you look at MicroStrategy share price, it's nowhere near now anything like it was in the .com bubble. It went literally into the stratosphere, and you could sell a load of stock. And it's just crazy. I mean, I have that chart. I love to look at it because it's like the maddest sort of thing. You go back. It was that. I mean, where's that candle going? 3,200.
I don't think I ever knew that. I never knew that they got that overheated in the .com bubble. That is fascinating.
It's so, and I mean, and he's bullish for crypto, and I said, but I've tuned out from a lot of the narrative, and it just, I mean, the thing for people to remember is this guy's loaded. He's a billionaire, and if Bitcoin went to naught, he's fine. So don't worry about him. He may have bust his company, but he's he's not going to be in a van by the river. He's going to be fine. And if people are in this to, I want to free myself from all these billionaires controlling everything, then maybe don't listen so much to billionaires. Might be, a plan. But it's,
that's a good observation. Another question. Oh, sorry.
Yep.
Somebody asked kind of a random one, but it's really up your alley about Matic. They said, can you quickly explain what Matic is? I think that was the question. Let me find
Matic, okay. Yeah, I mean, Polygon. So as a project, quite simple, really. It's a scaling solution for Ethereum. It's a mix of technologies now. It was originally a side chain, which allowed you to be compatible with Ethereum, but had its own consensus and validation method, proof of stake. It's provided a way to trade Ethereum tokens things like DeFi, crucially NFTs, etc., without all the gas fees of layer one. And it's evolved from its original sidechain route. Sidechains have risks for security that we won't go into now, but there are risks. Through to they've actually been acquiring ZK rollup technology and some of the better technology that's out there to build out perhaps a family now of scaling solutions for Ethereum. So it's extremely popular, has an awful lot of usage, and I would say should be bullish. I think one of my takes for this year is layer 2 on Ethereum is going to continue to explode in usage, and Matic is a big part of that. I think it's the biggest still by user count, etc. at the moment. There are some big projects on the other scaling solutions. I'd say as an investment, obviously we're not far off the top, so depends on where you like buying things as to whether you're buying here in a choppy market or you're a value buyer, if you like. You're a bit more patient and you like 60, 70, 80% drawdowns in crypto before you're getting very twitchy on the buy button because it's looking like it's good value. I don't know whether Matic comes down a long way, but if it came back down here, we had a bigger sell-off and into strong support or something, we had a retest here in November. They offer some value, but I like it. I actually don't hold it at the moment. I have traded it a bit during the bull market cycle.
It's been kind of surprisingly, it's been one of my better performing assets throughout all the bull market. I've done a decent job of trading it. I did mess it up quite a bit early on, sold way too early, and didn't kind of stick to some of my principles. Actually, Matic is the very asset that helped me really dial in and really think through and back test my exit of assets that were in price discovery. And so because the lessons learned from Matic, I've been able to do a whole lot better when assets do go into price discovery, taking at least part off at pretty close to the top. But it took Matic was one that just I don't know that I've been in an asset that was that explosive, really. When it started to break to the upside right around 80 cents, I was just dumbfounded that it broke through $1 like that, and then it just ran. Small side note, if you look at what happened to Matic after it broke $1, which took me by surprise, and it just went on up to 270. Interestingly enough, one of these days, if Bitcoin ever does break 100,000, I suppose I've heard lots of people say that they think that when it breaks 100,000, instead of like having a big sell-off coming into 100,000, it's going to break and snap and go like way through and then come back down below it. So interesting.
Who knows?
Parallel there.
This is one of those depressing moments when about Matic and it was 3 cents. It's like all you need to do is back the truck up in Matic, go away for a bit, come back and go, I'll just sell it at 2. So now I've just I've actually not walked past that island in Dalian earlier. I just bought it on the way past. It was lovely, but
yeah, exactly. I wish I'd have had a lot more Matic.
We missed we did see loopring and we were talking about scaling. I think the difficulty for me is I was a little bit, if we're doing lessons learned, I looked at the 2 projects. I still love ZK rollups because they inherit security. And that's me being a technical guy. This was a side chain with POS with 80 validators or something at the time. And I thought, I don't like it technically. It's better now than it was then. But what it did was provided a place that everybody needed, which was it provided a low fee environment for trading Ethereum assets. And it was operational very fast. And was compatible. You could use the existing tooling and everything else. So if it stepped away and looked at the bull case a bit more instead of being a technician, that was an amazing opportunity for those who accumulated here. Well, they probably long retired and aren't sat here looking at charts. So
they're not looking at charts with us anymore. If they
so any more questions
Matic,
there?
that's for sure.
Was there any more in the chat, Brandon, or are we?
Let's see here. Yeah, I'm just looking at comments here. What levels? Okay, so David asked, what levels would you have to break for you to sell some spot, or are you just planning to hold no matter what?
Yeah, I mean, for me, obviously, I only really have a offline hodl cold storage for Bitcoin. I honestly don't know. I don't know if I will sell it, but yeah, my base case is there's only so low this can go, because there will be buyers. That might be the thing to cut out of this stream when it's at $7 and wreckage everywhere. But I think it finds support somewhere here, so I'm not looking to get out of my positions. I'm not trading. I don't have a trading stack for Bitcoin at the moment. I moved my trading capital to Ethereum, and some of that's still in USDC at the minute.
Yeah.
Providing liquidity, whatever. So
I'll give you my answer. I have some that I won't sell just out of kind of more or less principle, but the majority of it, 80% of it, I would sell if we get the right conditions. But I'm not going to sell here on this prolonged, kind of sell off. I'll wait for a better bounce. And the reason I'll wait for a better bounce is that we didn't have, since the top that we put in early this year, we put in a marginally higher high, but not a significantly higher high. So the downside is a little more limited. I do expect a sustained bounce at some point once you get into some of the support that we have. To that end, if the fundamentals change, and so what I kind of marry is both the technicals of what's going on here and the fundamentals. If some of the more fundamental aspects about it really change, and we get the Fed start doing certain things to really tighten up, and broad markets come off pretty bad, I would probably trim, say 20% and put it in stable coin. I should have already, frankly, per my strategy, I should have been in 20% stable coins since, what's that price of the 50-day? Since about $59,000. So, lessons learned, a mistake there. I didn't execute my plan, partly because it happened over the holidays, or there was the Thanksgiving holiday, and I wasn't really watching things when it started to break down there. But yeah, so the other thing too is I'm watching that bottom trend line. That bottom trend line that Alan's got here, this little wedge that he's got. If we were to lose that area, I would probably defensively go into some stable coins, at least just in the off chance that we continue to sell off and or go sideways. And what I would do is use that stable coin to do some yield farming, and then try to compound in any sort of sideways market we got below that trend line for a while. That's the other thing. Yeah. So if we do lose that trend line, for me, I'll take some into stable coin just for having some better options for yield farming.
Yeah, and I think that something I didn't do enough of in this bull market so far was making it work. It's been a lot of hodling it offline, which is safe to do, safest way to hold it. But it's not worked very hard there, and I've been very cautious because it takes a lot of work to research smart contract based DeFi and whatever to be sure. Again, the technician in me says I gotta have a good look at it. I don't want to just stick my hard-earned crypto bag that's up from $300 buying Ethereum to go and stick it in something that gets rug pulled. And so I've been very cautious with it. But yeah, it could have worked a lot harder along the way. So obviously we're seeing correlation again here. Nasdaq's looking gloomy and crypto's under pressure. We've been seeing this a lot recently. Tech's getting sold again here, Tesla 5%, etc. It's just Chinese tech's holding up a little bit today because there was a bounce earlier in Hong Kong with it. Yeah, good old Apple just 1%.
The 10 years continuing to kind of find some strength here, but I mean, obviously it's on the back of the Fed minutes from last month. So
this obviously is below support here. It's not looking very lovely. Seen a lot of fake outs on this line, but Nasdaq could come back down to the bottom of this channel. Maybe 15,291 would be a decent place with a wick.
Yep,
it's still bullish. If we lose this channel, then yeah, you've got a lot of levels here that we could be seeing. So we'll see. There's been a lot of talk. It's all broken a lot of times, and we've kept finding support. I thought here, we could fall out of the channel, but obviously the Fed's the difference. And yeah,
And they quit propping up markets, and it can turn around pretty fast here.
And this is the joy, and this is tech stock. Obviously, it's Tesla, but that thing's come up and hit that line, and down we go. Yeah. Getting day traded, as it always is, the most traded stock of all.
Is it really?
For a long time.
Yeah, I think I knew that.
Yeah.
Yeah, it's very high volume.
It's ridiculous. Yeah, I mean, a lot of brokers have sometimes got restrictions on all sorts of things with Tesla. It's just everybody's trying to trade Tesla because it keeps doing this, so you can make it.
Yeah. Big stock too.
Tech is looking pretty nasty. Yeah, it's coming straight down again, like it was yesterday.
Yep. Got another question here. I thought you'd be a really good one to answer. Does ETH have any real advantages over the new layer ones other than scale? I'm not sure what you mean by scale, QDizzle, but is the ETH scaling thing not just trying to squeeze a square peg through a round hole? Do they have any advantages other than scale? So I think he means more or less throughput scale, maybe.
Yeah, I mean, I think I can see a wider question in that. Maybe not sure what was intended. I think the thing people to remember with Ethereum is if you look at adoption and you look at where most things happen that have utility in crypto, they happen on Ethereum in one form or another. And these markets that are forming, whether it was originally DeFi and Uniswap, which was built on Ethereum smart contracts, through to the explosion in NFTs recently. We're seeing DAOs, we're seeing, all of the funding work that's going on there, et cetera, et cetera. These things are happening in the Ethereum community and spreading out, almost without exception. And obviously the evolution of the technology in Ethereum from a layer one that's got a low TPS and all the things that are there, but that's, for good reason to maintain decentralization. And, we've talked about that on previous streams. We are now seeing ways that you can maintain decentralization and provide scale and provide a set of options for developers, depending on whatever application you want to build. There's different, because it's community-based scaling through all the different layer 2 projects. You can really see there's a platform there now for all different types of applications, from your so rare, fantasy football with gazillion users, just like a, sort of Web3 version of a traditional Web2 app, if you like, through to, you might want to make micro payments on Polygon or Blueprint or something with a really nominal fee. You can find a solution there for whatever your application is. And there's even layer 3 muted. And the amount of developers that are working on things, get past the metrics for layer 1, which are, just check-ins and whatever. If you add all the community up and look at all the brain power that's working on the evolution of crypto, and Ethereum is borrowing from other things, the POS, for example, is borrowed, really. I mean, the testing's gone on other layer 1s, primarily with proof of stake, and Ethereum's design has evolved over the time to reflect, best practice. There's a lot of detail that's been incorporated in the last year, which has come from elsewhere. I think, there will be an explosion of what's being dubbed Web3, etc. Things being built differently. You've got proof of ownership and NFT custody of things. Ethereum's going to play a big part in that, and I think the upside's still huge for it. And I think if we were looking forward at where am I looking this year, I'm still heavily focused on, I think, I'm going to be looking at my allocations to look at, do I put more into the Ethereum ecosystem? Because I think with the merge coming, a 90% issuance reduction, scaling's there, sharding's in the roadmap, and we'll probably look next week at all of Vitalik's, look at the roadmap that he's put out there, his excellent diagram that's there with all the different sections and all of the bits of the roadmap. I think there's a lot more going on than just some of the simple narrative that, fees are too high, so we've built a few clunky scaling options. I think there's a very almost like pure design that's there that I think will still be the core of crypto for some time, and I'm not singular in that, I see the point of Solana, I see the point of these other things, there's potential for Cardano and everything else if they can get things working right and they can get, adoption and purpose and some vertical market, if you like, to get some traction, get something going in there that brings in users and have some purpose that's not maybe just a copy of something else. And there's space for everybody. But I think there's way more upside for Ethereum this year. That's my, will remain my core focus on understanding that ecosystem and everything that's going on, because it is so big. And we'll be investing and positioning accordingly, albeit right now, I'm just taking a breath before I move any allocations because we're in this turmoil. So hope that, answers the question at least a little bit. You're muted, Brandon. So.
Sorry, he did clarify that he meant scale. Value locked in is equal to scale. So I think what he was saying is like the network effect. Does it have any advantage other than the network effect? So yeah, I mean, I would say the other thing too to consider is when it comes to when people start to talk about the space or think about the space, people who are maybe newer or just want to understand the basics. First of all, Ethereum is the benchmark. It really represents the discovery of the ability to do this decentralized compute, methodologies, and then write that to a secured blockchain, right? So with the gas fees, they started with the gas fees in the Ethereum virtual machine, allowing you to do full, program computation and be able to write that back to a blockchain. That represents a discovery of sorts, kind of like Bitcoin represents several kind of discoveries, namely that more hard, monetary discovery, absolute scarcity of a monetary resource. So Ethereum so the network effect is definitely very strong on it, but it also again represents more or less a discovery. So it's going to continue to get interest because of that. So I think the other thing to consider is that Ethereum's not going to. I said the other day in my Cardano update video, you need to be more than just a little bit faster than Ethereum, or even a lot faster, right? So if you can do smart contract finality is probably the most important metric, not so much transactions per second, because everybody can scale TPS one way or another. It's more how fast can you do smart contract finality. So how fast can you have somebody write a smart contract and then finalize the outcome of that smart contract and have that written to a blockchain to where those transactions are then secured by the blockchain? How fast does all that happen? And I think that smart contract finality piece is maybe one of the more important pieces to really look closely at. And so there are some chains that do that a lot faster. And so that's maybe one of the larger advantages. But even that's only an advantage for certain applications. It's not an advantage ubiquitously everywhere. A lot of times the layer one security is the biggest advantage, and that Ethereum, I don't see Ethereum losing its layer one, security advantage over all the other smart contract platforms for quite a while.
Yeah, that's your main headache as another layer one is, would you be better as a layer two? We're actually seeing, I think one of the projects out there is porting itself to be a layer two on Ethereum because they've decided there's no point in trying to run their own security at the base layer. And, the evolution of ZK rollups is interesting. I loved an analogy in the recent Bankless with Vitalik that just talked about the old snake game, where the snake gets longer and longer and then you eat yourself, and it's one of the real classic computer games. That you can play. You can play it in a browser now, and it just, you have to go and eat the next star and then try not to eat yourself whilst your snake gets longer. And the sort of whole ZK rollup point is that you've got a head and then you've got a proof, and the body of the snake can be as long as it wants, but it's somewhere else. And it's possible to keep, running the snake game on and on and on and on. And it's sort of one of these lovely analogies about how roll-ups and proofs are changing everything and maintaining security. And, well worth checking out. We'll talk about it perhaps next week as to sort of the takeaways from that. There's a lot I think Ethereum will look very different, and we're already seeing applications, such as DYDX. You can go and trade real time with order books, etc., on layer 2. They've done a phenomenal volume in December of trading that platform, running as a layer 2 secured layer 1, which is real time. So it sort of goes to show that I think the limitations people see are the historical ones of layer 1 and not the realistic ones now. And people are building straight on layer 2 now. They're coming into the space. There's not really much gain from building on layer 1 now. There's no point. You inherit the security. Why not go for low fees and much faster and inherit the security and have the full ecosystem? I mean, I say the negative that's there is simply fragmentation of liquidity and everything not being in one place now. But I think if you look at the arguments about trying to get to, say, global scale and hundreds of thousands of transactions a second with payloads, I think the big fat layer 1 just is unrealistic, personally, which again, for another day.
Yeah.
I think you have to have some form of scaling. If you put the sharding in, which is planned in Ethereum, under the rollups, you get to the hundreds of thousands of transactions a second just off one, roll-up project. So I think, I think it's handled there. We'll see. I say I'm not singular in crypto. I like having portfolios when I'm investing. I don't think I would have everything in the Ethereum space, but I think, I think it's hard. I think there is a danger that you're trying to write a PC operating system and Microsoft is there. That how long has that stood up? It's still standing up now, and it's tough, because it's the applications. You go to put a desktop out in your business where you work and it's not running Windows and it hasn't got your business application. Everyone says, "What the heck are you doing? I need to run this thing. I don't care. Windows is ubiquitous." There's a degree of that as well after a while, where it becomes so entrenched, it's very hard to get that out. And the benefit of moving to something else in that space is just not enough to justify the switch. So you get that effect of just being the standard, which is Ethereum's kind of developed to some degree, albeit it's still an emerging market. It's still early, very early in crypto. So obviously I've touched a little bit on looking forwards, Brandon. I think I would say my primary takeaway for this year is I'm looking at whether, and this is tempting as we're back down here on ETH BTC, is do I rotate a little more into this space, and what do I invest in? So I'm looking at perhaps some things that are a little bit earlier, some things with a little bit more upside to allocate some of the portfolio to. And then am I a little bit heavier ETH to BTC, or just keep my ETH position and be just a little bit less BTC for this year? I just think there's potential we see outperformance in that space from Bitcoin. And let's look at last year. Let's just do the brutal chart for everyone who's stacked up on Bitcoin. So there's, nice year for 2021. Ethereum's year is this, boom. Last year is sort of 3x over Bitcoin. I don't think we're done yet on this ETH BTC ratio. Obviously, you have to ignore the original candle there. I think we have more upside here towards where we could flip. So yeah, a very interesting year for me this year. Looking forward, especially if the merge goes through in the middle of the year around there, where you've got 90% issuance drop, you've got all sorts of pressure on Bitcoin there. And I say the other thing for me that I cannot stop mulling over as I'm into sort of conservation, sustainability, is the data around proof of work that I'm seeing and the amount of energy it's consuming, and it's going up. I still have an issue with that, and I'm just mulling over, and I'm not going to rush into decisions, but I'm mulling over how compatible that is. I'm going to start sounding like Elon Musk, but I'm just mulling over how that fits my investment strategy when elsewhere I'm very much in the play of the EVs, of renewables, of the drive to sustainability, because the momentum is looking unstoppable. The world wants to change. So how does Bitcoin align with that? To me, it's, if there was a lobby you wouldn't want to have against you, it's probably climate change at the moment. If oil and gas are struggling to defend that now, which has got the most money in the whole world, there's no one else with that much money, and they can't stop the shift. I don't know if I'd want to be on the other side of that. That's one of the bear case things for me for Bitcoin, not in terms of USD versus Bitcoin, but in relative performance of Bitcoin versus something else I could invest in. And ultimately for every dollar we invest, that is our decision. Where do I put it? Where do I think I'm going to get a strong, safe return versus everything else I could invest in? There's thousands of stocks, everything else. So that's kind of where I am with my head in crypto at the moment, is, probably a bit more Ethereum centric, looking at some smaller caps. What have I got that I could get into? Maybe layer 2, maybe some other interesting things around the ecosystem, and being cautious with Bitcoin. I'm not suggesting I would exit all of my Bitcoin position, but I'm mulling that over at the moment, is to be less exposed, because there's things I don't like, and that's my take.
Yeah, there you go. That's something, everybody has to decide too what their investing ethos is, and how much weight they're going to put into that. And that's definitely a part of everybody's decision process about managing investments. Well, I think we are a little over an hour here, so I think it's probably about time to wrap. I think next week, let's queue this up for Alan. Maybe he can give us an update on Ethereum 2.0's roadmap. Vitalik just did a Bankless podcast that I haven't had a chance to listen to all the way through myself. That he laid out, I think, 5 phases for the Ethereum 2.0, update, and so they're making good progress. It doesn't seem like it. So maybe Alan can give us a rundown of that next time, and his thoughts on the plans for that. And then, yeah, otherwise, to your point and everything else, I mean, I think one of the biggest threats, I've said it time and time again, I keep saying it, one of the biggest threats to Bitcoin is exactly what you talked about. Not that I totally agree necessarily with some of the anti-proof of work arguments, but the fact is you have that broader shift, and the one group that you don't want to be against you is that ESG green movement. They've got a lot of power and a lot of momentum right now. So that's one narrative you don't want to be on the wrong side of. So that's the biggest, probably the single biggest concern I have with Bitcoin is that whole narrative. Whether
regulation sits there probably as a threat, doesn't it? But that, regulation is a threat on every investment you make. So for me, I don't see that much different with crypto. Perhaps it's much earlier in the regulation process, but it's still a problem. But you have that. You could be in a, I don't know, something.
Oh, I think we lost Alan.
This is the joy of investing. You have to keep an eye on regulations. So I don't see crypto as particularly different there. But yeah, I do. Yeah, I agree with you. I think it's just tough. I mean, there's so many factors in crypto that can move one way or another. I just have a bear case nagging me for Bitcoin this year. So look at the bounce on the Nasdaq as well. Whilst we're talking, extraordinary, now up. So
did it bounce back already?
Yeah, my internet's being horribly slow here, but
yeah, you cut out there for a second. But yeah, we're getting a little bounce in Nasdaq right at that support level. Could be, keep an eye on dead cat bounce, but we'll see. There's a lot of money floating around, and it's really hard. That's the big thing that I keep saying is I don't know where the money's going to go. If equities sell off, I don't think it'll last long because I don't know where the money's going to go. Maybe to some other heads like gold or metals or something, but I don't see that large of a rotation.
Peter Schiff's going to pop up, so everyone's buying gold. See, I was right, but yeah. I don't know. It's it's tough to see, isn't it? And it's I mean, I guess probably the thing I didn't mention that I've mentioned before in crypto as well, which I'm cautious about, is just how much of the world has been cut off from crypto. I think it's easy in the West to think, oh, everyone's buying crypto. Even in the UK, I can't invest my pension in crypto. The funds are blocked. There's a lot of restrictions everywhere. There's now more threats of Bitcoin mining bans and crypto mining because people are having trouble with the electricity grid. There's a lot going on there that's to be cautious about, certainly. I'm going to sound like a right bear this week looking at this stream, but yeah. Perhaps we should be bearish all the time, and then the markets will start going up. That's the solution.
Probably, yeah. Next week we need to get on here and just talk the bear case for everything and how we're shorting everything, and then we'll get. All right, Alan. Well, I'm gonna wrap. Thank you for your time. I appreciate it. Thank you everybody for joining the stream. I hope we got to all the questions. One last comment. Conrad says there is an advantage to being first in the market. Everyone else has demonstrated new solution is more compelling. Exactly. Yeah, there's a switching cost. It's one of Buffett's moats. It's called the switching cost. And you have to have a compelling reason for people to switch off of the solution they have. But all right, guys. Well, thank you guys for your time. And Alan, thank you so much again for joining me this week.
Thanks to everyone. Great questions as always, and hope people won't be too underwater. Tune in next week when we have another go. So,
all right, y'all take care.